Hello, everyone. Welcome to AI Crypto Insights. Today is January 8th, 2026, and we'll quickly review the market highlights in just a few minutes from an AI perspective. This program is for educational reference only and does not constitute any investment advice.
All right, first up, let's dive in and take a quick pulse check on the market. Okay, so it looks like the market's taking a little bit of a breather today. You can see Bitcoin has pulled back just a bit, a little over 0.5%, landing around that $90,800 mark. And, Ethereum's basically doing the same thing with a similar small dip. It's really just a minor cool down, especially after all the action we've been seeing lately.
Okay, now for what I think is the really interesting part. Let's check in on the institutional and regulatory watch. This is where the big players from Wall Street and DC are making some seriously big moves.
And wow, the institutional dominoes just keep on falling, don't they? Hot on the heels of their filings for Bitcoin and Solana, Morgan Stanley, the financial giant, has now officially submitted paperwork with the SEC for an Ethereum Trust. I mean, the race for institutional-grade crypto exposure is absolutely heating up. And hey, not to be outdone, JP Morgan is right there in the mix, expanding its own blockchain work. Their JPM coin, it's getting a phased rollout this year onto the Canton network. And that's a big deal, because Canton is all about privacy and compliance. This is a huge step in bridging the gap between old-school finance and new digital asset infrastructure.
Meanwhile, over in Washington, all eyes are on the clock. There's this critical timeline playing out for the Clarity Act. That's the bill that's supposed to finally bring some clear rules to digital assets. So after a bunch of closed-door meetings, the Senate committee has a date circled on the calendar, January 15th. And here's the kicker. The federal spending deadline is on the 30th. So there's this massive push to get this thing voted on before it gets all tangled up in a potential government shutdown. The stakes? Yeah, they're incredibly high. And this institutional trend isn't just happening in the US. It's absolutely global. Just look across the pond. Barclays has made its very first investment into a firm dealing with stablecoins. They're backing a US clearing platform called UBX. This is such a clear signal that the major banks are done just researching this stuff. They are actively funding the core plumbing of the whole digital asset world. So with all this money pouring in from traditional finance, you've got to ask, right? How are the crypto-native companies themselves responding? Let's take a look at their game plans. This is fascinating. We're seeing a real split in strategy among the big Bitcoin miners. So on one side, you've got Riot Platforms. They had their biggest monthly sale ever back in December, basically cashing in while prices were high. But then on the other side, you have companies like CleanSpark and BitFuFu doing the complete opposite. They're still stacking sats, which is just crypto speak for accumulating more and more Bitcoin. It really shows different outlooks on where the price is headed and, different business needs. Some need to sell to cover costs, others are just doubling down for the long haul.
All right, let's peek inside some corporate treasuries, starting with Bit Digital. And these guys aren't just sitting on their assets. No way. They are actively putting them to work. Their treasury is now holding over 155,000 ETH. And get this, a massive 89% of that is staked. That means it's earning yield and helping to secure the entire Ethereum network.
And just to give you a sense of scale here, the value of their Ethereum holdings is currently sitting at over $460 million. $460 million. It just goes to show you the immense amount of capital these publicly traded crypto companies are managing now. It's wild.
And hey, it's not just an Ethereum story. Let's look at Upexi, a company that's all in on Solana. They've ramped up their holdings to over 2.17 million SOL. Right now, that's a position worth more than $300 million. That is a huge corporate bet on the future of the Solana ecosystem. So the big question is, are these strategies actually paying off? Well, for a company like BTCS Inc., the answer seems to be a resounding yes. They just reported a mind-blowing 290% increase in revenue year over year. And where's that coming from? Primarily from their Ethereum-focused infrastructure services. Things like staking and running nodes. Okay, so the market isn't just getting bigger, it's getting smarter. It's maturing through some really strategic acquisitions and global expansion plays. All right, here's a huge move on the infrastructure side of things. Fireblocks is buying a crypto accounting platform called Trees Finance. It's a $130 million deal, and it's all about one thing: building a complete all-in-one fund management solution. They want to make it super simple for big institutions to track all their digital assets. And speaking of global moves, the fintech giant Revolute is reportedly in talks to buy a Turkish digital bank called Foops. If this goes through, it could be their gateway into the massive and very crypto-savvy Turkish market. Of course, they've still got to get the green light from regulators. Okay, so we've looked at the market, the institutions, the companies. What does it all mean? What do all these data points signal for the future? Let's try to connect the dots and look at what's on the horizon.
The venture capital powerhouse Andreessen Horowitz, you probably know them as A16Z, they've made a really bold prediction for this year. They're saying that privacy is no longer just a nice feature to have. They believe it's going to become the key battleground where blockchain networks will fight it out for users and for capital. And you know they're serious because they are putting their money where their mouth is. A16Z just led a $15 million funding round for a project called Babylon. Now, what Babylon wants to do is let Bitcoin holders use their BTC directly in DeFi without needing to wrap it or trust some third party. The goal here is huge, to unlock the massive amount of capital that's just sitting dormant in Bitcoin. And it's not just them. These signals are popping up all over the place. You've got Wyoming launching the first ever state-backed stablecoin. Over in Brazil, a presidential candidate is actually campaigning on the idea of a national Bitcoin reserve. And even in the world of high-end art and real estate, Sotheby's is reporting that crypto is becoming a major force. The influence is just spreading everywhere. So let's step back for a second. With all this data flowing in, from institutional filings and miner sales to these big M&A deals, what's the one key signal we should be taking away from all of today's noise? AI Analyst conclusion. Institutional adoption accelerates and corporate treasuries diversify, even as miners' strategies diverge under market pressure. Feel free to share your thoughts in the comments section. See you in the next episode.